Jonathan and Paula, welcome to the show today.
Hey, Michael, thanks for having us.
Well, that's exciting that you guys are on here. Jonathan, I know that you just literally quit your job and you're at home right now, which is not unusual. A lot of people are at home, but you're kind of more permanently at home. What was your last day like?
Honestly, kind of nonchalant, just walked in like a normal day and got a sign poster from work. I worked as an engineer, an aerospace engineer for a helicopter company here in the Dallas-Fort Worth area, and had been there ever since I graduated college. And so, yeah, it was pretty surreal walking in the last day and then being like, wow, I'm not going to be back in this building again, but definitely exciting to say the least. So, we're really happy about it.
What did your friends and family and coworkers say? Did they thought it was kind of odd or interesting, or what was their response?
Yeah, I'm pretty blessed, I guess, in the sense that, well, first of all, my first family member here with us, Paula, was definitely really encouraging. We started our multifamily business together and worked through it together. And getting to the point where, one of us could jump and focus on it full time was a huge goal that we had. So we were certainly both excited about it. Early on in real estate, probably a lot of our friends and family thought we were crazy, but we began to voice our desire to do it full time pretty early on. And so I don't think anyone was surprised. But I do think probably, underneath the surface, there's a lot of people that were like, well, what is this about? This is kind of weird. So, it definitely sparked a lot of good conversations.
Yeah. So, you and I talked for the first time about 18 months ago or so. And you had kind of said that you don't have any real estate investing really experience at all. Some people don't, and some people have a bunch of houses they flipped or landlorded. Now, what happened, whatever, year and a half, 2 years ago that precipitated, you looking for real estate? Like, why were you looking for real estate, and what were you trying to do at the time?
Yeah, I'll let Paula speak to that one.
Yeah. So our real estate journey really started about 3 years ago. And so we both had a W-2 job. I did management consulting. He was in engineering, and we reached that for that. And then that's when we started to lease our first home. Then we bought a fourplex, and we did, moved into more little homes. And so that organic transition happened after we realized that in order to scale our business, we needed to go from single family and small multi to bigger and larger communities. And it gave us a really great opportunity to leverage our skills that we had, learned in corporate America and how to use them into multifamily. So it was I would say a very organic transition.
Yeah, that's right. So you guys were you at the time, were you just trying to supplement your income, or did you feel that this was like a way out of your job? When did that happen?
Yeah, I think that starting out, when we first read Rich Dad Poor Dad, when we first started investigating real estate as an investment class, we didn't really think of it as like a business or something we were going to do to leave our job. It was just, okay, we can invest in our 401k or we can invest in real estate, and maybe we should diversify and look at some of the benefits that real estate offers. But I think after you've worked so hard to get traction in this business, you really just want to keep going. So I think that's definitely one thing that propelled us. And I think at least one thing for me in corporate America that was always challenging is we're both very type A personality individuals. We like to work hard. We like to challenge ourselves. And so I think there's always this sense in corporate America that there's like a lid over you, that no matter how hard you work or how much you produce, you're only going to go so far in a certain amount of time. And with real estate, it was just like this whole new world was open where there were no limits. We could work as hard as we want. We could try to work more efficiently. We could do things in a manner that we thought was best and, build our own business without any kind of limitations on where we could go. And I think once we realized that was a reality, that's when we said we got to do this full time eventually.
So who kind of led down the path, and how did you guys get on the same page as far as, hey, we're going to go in this direction with real estate? What did that look like for you guys?
That's a really great question. Actually, we were talking about it yesterday on Valentine's Day, because it was 2 years ago. We were in Nashville and we were talking, celebrating Valentine's Day. We were talking about, okay, like we know multifamily, we want to do multifamily. Where do we start? What can we learn? And so I think that we were organically on the same page. We both wanted, to have a legacy and have a, you know, family business after we learned about real estate. And so we both kind of grew at the same pace. And it was very kind of like a mutual consent of, we want to do this. How can we get it done? What is the best way? What is the best investment? And so we're just really thankful that we never had necessarily conflict as of, you know, what to do next or where to start.
How did you get started then from that point forward? So you guys are on the same page, you're talking, and you're on the same page about, you know, real estate, multifamily as a vehicle. What did you guys do first, second, third?
Yeah, so there's kind of a few things that we did. You know, first of all, we started out learning about multifamily. As you know, there's a lot of differences between multifamily and the single family that we had owned. And so, you know, we had to learn the terminology, we had to learn the analysis, you know, everything that you need to know to be a, you know, proficient operator and someone who can be taken seriously by brokers and other vendors. You know, we had to come up to speed on that. And so that was kind of step one. A good chunk of that we did on our own. And then part of that we also did through the mentorship program later on when we joined. But I think educating was one big step. And then networking was probably the second big step. So everyone who said anything about multifamily in our local real estate meetup, we took out for dinner and we spent time talking to them and understanding what their experience was in multifamily and how someone like us could get started in it. And so we also grew a lot through those conversations and just built our confidence that these were normal people just like us. They had just committed to, you know, a goal and they had achieved it.
Yeah, it's interesting, right? Like people just like you, and it's when you look at it from the outside in, it almost seems overwhelming. The idea of, you know, you buying a multi-million-dollar building, like it's crazy. I mean, you know, most people it's just outside of the realm of imagination, and you do kind of feel like you're kind of crazy. And as a result, at least you have another crazy person with you. That helps. But you know, as a result, you really don't believe that you can do something, right? If you don't believe you can do something, you're never going to take any action towards it. And so through networking, you meet other what I call crazy people, and you're like, oh my gosh, I'm not the only crazy person. And then you start asking questions and now you start developing a belief. So that's pretty cool that you mentioned learning and then networking. Was there anything else that you guys did early on?
I think that those were really the ones that really propelled us to do that, kind of going towards what you were saying on just changing our mindset. I think that no one, you know, of our family or close friends had owned an apartment before we did, right? So when we first met or we first heard of like from people who had done that, it was like, oh, they must be very special. There must be something really unique. And we read, one of the things that we did was read your book. And I remember writing an outline of your entire book and be like, okay, this is really practical. Like it's really doable. Like for me, my brain works like that. So for me to be able to put steps or structure, I was like, okay, like I can see it. I can see other people doing it. Now, how can we get there? And I think the book, The Who, Not the How, was really, really important. And that's why we stand on the shoulder of giants, because it's not on our own doing that we have been able to accomplish what we have accomplished. Is really due to other people who did it before.
Yeah. So you see kind of this pattern pretty often, but I love the fact that you said, hey, we took some people out to dinner. So it sounds like you got some, you know, education in the beginning. You tapped into, you know, maybe Michael's network or his book, which is an amazing resource, of course. And then you started to meet with people. And when you met with people, I'm sure it started to make it more real, right? So then you're like, oh, these people are actually doing this. And I'm just curious, when you had those conversations, because I have a similar experience myself, where were the gaps kind of filled in for you? And was there anything that was really memorable that helped you guys kind of take that next step?
Yeah, I think so. It's interesting. And to answer that question and a little bit on Michael's previous question about kind of what else we did beyond networking or learning. So when we first started real estate a few years ago, we attended a local RIA meetup. We still go every month. And so we actually got to be the speakers at it beginning of this year. So that was really exciting for us. And so education and network were, you know, the two of the things we mentioned that went into our success in real estate. To be more specific, items 2 and 3. The first one that we mentioned was dreaming, right? You have the idea, I can do this. You think of what your goals are, et cetera. That's no surprise. But the last one is honestly the one that I think most people skip, and that is taking action. So you have to do something. You can network all day long. You can, listen to all the podcasts, read the books, get on the Zoom calls. But at the end of the day, if you don't start taking tangible steps of action, you're not going to go anywhere. And so, what are those steps? I think it's things like, analyzing a certain number of deals. It's things like calling so many brokers a day. It's things like, I'm going to submit this many LOIs on properties, even if I don't think I have a chance at winning them, and by getting those reps in, you start to, build both your confidence and your consistency. And that's what's going to, eventually lead you to success.
That's a critical thing that you said, and the pattern is basically the same with anyone who's successful, and it almost always has the same sequence of education, sometimes mentoring, networking, and then most importantly, taking action. I think that's absolutely critical. And what matters less, and just looking at hundreds of people that have gone through this process, what matters less is essentially almost who you are and who you know, and what resources you have. It doesn't matter what experience you have as much. It doesn't matter how much money you have or who you know. Having more of one makes it slightly faster, but it really doesn't matter at the end of the day. What does matter is taking action. And so, at one point you got to stop listening to this podcast and reading books, and you got to actually do something, or taking, courses. So taking action is absolutely critical. Now, of course, one element of this is you need a certain amount of time. Okay. And what I hear a lot is, and obviously you must have addressed this somehow, you're both busy professionals. Literally almost everyone who has gone through this has been a busy professional of some sort. 100% of people who are now financially free have had a full-time job. Somehow they manage it, but it comes up all the time. So the question is, how did you guys manage it? You got a full-time job, you got a family, you got obligations. How were you able to start doing this on the side?
To be honest, it's not a pretty story. It's not, we got to do all the fun things on the weekend and got to have our own business and be successful at our jobs. It did not happen like that. It happened with a lot of sacrifice, and many times we had to say no to, fun activities and, weeknights and weekend hangouts with friends. And so there was a lot of sacrifice early on, and we still do those sacrifices today, but at a more minimal way. And we have created boundaries where we're able to say, hey, like, we're doing this for our business, and with Jonathan being full-time, now a lot of those responsibilities fall into, his weekly schedule versus our weeknights and weekends. And so we have been able to transition and create those boundaries now. But early on, it was all of our free time was real estate. And even today we find ourselves, yesterday going on a date night, it would be like talking about real estate, because it's just such an integral part of who we are now that it's hard to stop talking about it.
So I love that you brought that up, because I don't think it's brought up enough, where there's always a sacrifice that comes in somewhere if you need to get where you're going to go. I mean, everybody has that involved in making those kinds of transitions. And so sometimes it's every weekend you're like, listen, I'm sacrificing these weekends until we get there. And I'm just curious, like, where does that, how do you figure out where to draw that line and what that looks like for you? Is it like, listen, we're just going to be guns blazing for the next couple of years? Have you guys kind of thought through that at all? And just give us a little insight as to where you guys kind of, how you maneuver that.
Yeah. So I think that's probably one of actually the good things about working with your spouse on something like multifamily real estate is that, Paula and I have slightly differing opinions on how to do this, but what that's really done is create a balance in our lives between just, going full bore all the time versus never having any time to rest or do anything else. And so Paula is very disciplined about, like, she sits down to work and, she's got 4 hours or whatever, and she's going to focus and just get it done. I'm more of this just very consistently, hum along, but just keep working forever kind of person. And so I do think there's a sense that when you're starting out, especially that first year or two, you have to do whatever it takes. And, what I mean by that is, when I was in engineering school, I was an aerospace engineer, and we talk about, like launching a rocket, right? And you have what's called the escape velocity, which is basically you have to put enough thrust, enough power behind this rocket to get it to a speed where it can escape orbit. And when you do the math behind it, needless to say, it's a tremendous amount of power. But unless you hit that amount, you're not going to make it. And I think it's kind of the same when you're starting a business. There's just a tremendous amount of effort that you have to put up front in order to achieve your goal. And if you're not willing to do that, a little bit of effort is just not going to get you there. And so I think you just have to be committed to the outcome, committed to success, and that you're going to see it through. And, things are going to change one day, but for now you're going to, do whatever it takes.
Yeah, I love that analogy about the rocket leaving orbit. It's so true. And I think this is one of the reasons the law of the first deal is so powerful as well, because it takes such an inordinate amount of effort to get that first deal done. And then after that first deal, it just becomes easier. And I do want to drill in some of your deals right now. I know you've done 3 deals. Can you just talk about how many units you have right now and how much money you raised in totality? And then I'd like to talk a little bit more about the first deal.
Yeah, absolutely. So we have a little under 200 units as GPs. We also have invested as LPs along the way, some too. And so in short, we did 3 deals like you mentioned last year. The first one was a 100-unit that we co-GP'd on in the Tulsa, Oklahoma market. We closed on it on a Thursday. I think it was like a date in June last year. The next day on Friday, July, the 1st of July. The next day, I signed the PSA for our next property. And then we closed on it, what would it be, 60 days later or something. And then as soon as we closed on it, we left for vacation. And during our vacation, I signed on the PSA for our last property that we did. So
It's amazing. It really is amazing. This happens like literally all the time, and you almost have to expend more effort not to do the next deal, And it's almost like the universe affirming you for the first one you've done. They kind of follow, and then it gets a little harder to do deals 7 through 10, right, Garrett? To get a little harder. But so talk about how about that first deal. So how did you go about finding it? Tell us a little bit more about this deal, because I think it was a joint venture, right?
So that was our middle deal. So our first deal, like I mentioned, we were co-GP. So we did not find that deal, but rather we were brought onto a team by other sponsors who found it. And basically they wanted our help for a couple different reasons. One, we were the boots on the ground in that market. We lived closest to the property. And so, I participated in the due diligence walkthroughs, a lot of the CapEx, structure and project management type stuff. And then we raised money for the deal. And so those were sort of our value add contributions to that project. The second and third deals, the second one was
before we move on. Okay. Let's dissect it, because no one cares about the 5th and the 6th deal, right? We all care about the first deal. All right. So you didn't find the deal, which is cool. So you must have found the operator. So let's talk about that part of it, the finding the operator and engaging with them. We'll talk about the raising the capital, but how did that come about? How did the two of you connect? How did you find out about this deal?
Yeah. So the particular people who we were on this deal with, I think you've spoken with them before. Their names are Michael Barnhart and Susie Sevier. They actually live in the UK. And so they had done one deal in the Tulsa MSA from the UK, which is obviously incredible. But I think they really wanted a fellow GP with, a little bit closer to the assets that could go up there and look at them and do some of that boots on the ground work. It's interesting because I had actually found a deal the previous fall. So I think 4 or 5 months before in Oklahoma City. And I had asked them to be GPs with us on that deal. But unfortunately, during due diligence, that deal fell through. So, one of many disappointments along the way to the first deal. And so they reciprocated and brought us on to this deal in Tulsa. But that relationship was developed very organically through a number of different networking events and conversations and stuff like that along the way.
I remember that podcast episode. I have to look it up, but I remember the two Americans who live in the UK, and man, I couldn't believe the ninja stuff they had about virtual networking via Zoom, right during the height of COVID. It might have been like a year ago. And I'm like keeping notes here because like they would engage, they would get on a Zoom call, they would they would message everyone on there and get their email and their phone number, and then they would set up a call with every single one that responded to them, right? And it did this over and over and over again. And you must have been one of the lucky victims of that somehow, and you got in a conversation. And now I know the other end of that, right? And so this is how they ended up finding a deal, and then also partnering with the deal. And I remember, oh yeah, we need a boots in the ground. Now we're networking right now to get boots on the ground. And it was Jonathan, And so that's pretty cool. But you did mention something, and let's talk about the setback you had 5 months ago, because we skipped a little bit to when you started your education and your mentorship and your first deal. And let's talk about that because it's not usually a straight line. And it appeared to be that it wasn't a straight line. Talk about what happened there 5 months earlier.
Yeah. So, I mean, probably anyone who listens to the podcast regularly knows kind of like, high level structure of the mentorship is you get a plan for, I'm going to look at this many deals, underwrite this many. It's a funnel, right? I'm going to put this many LOIs in and eventually something's going to stick. And so we started down that road. We'd been in the program probably 3 or 4 months. And I found this particular property and, it looked like a win based on the financials that I was provided. We put it in a competitive offer and our LOI was accepted, drafted a contract, sent it over to them. And then basically, long story short, we went to do our due diligence, and when we received the actual financial records from the property, they did not match the financial records that we were given up front. Specifically, they were not making as much income as what they said that they were. And so we went back and very professionally addressed this, but said, hey, there's some stuff here that doesn't add up based on this. This is our new offer price. We don't want to retrade, but we were told this, and then we were given this when we got the actuals. And so they were not willing to accept that retrade. And so therefore we, did not go through with that PSA. It was pretty disheartening. I mean, it's the closest that we got to a deal. I mean, we lost obviously a lot of LOIs, a lot of best and finals going into our first deal, but it was definitely the closest one that we had. It was very discouraging. And you kind of wonder, well, am I ever going to find anything? Also, I felt like the partners that we had pulled in, Michael and Susie, and then one other local investor here, I thought they were just a great team. And honestly, I was kind of disappointed to lose all of them as partners as I was to lose the deal. And so that was pretty disheartening. But, I just believed like, hey, we're just going to keep at it. And, eventually we're going to find something. So we're definitely not going to overpay for something and, put our investors at risk.
Yeah, that's a smart way to look at it for sure, because you don't want to get in a position where it gets a lot harder. Sometimes people are too eager to do the deal, and then they put themselves in a much tougher position afterwards. But there's one thing that I think, even if you lose a deal and you're working towards one, and this is actually the case for myself, Michael, and Drew at Nighthawk, is you get into it, you start working the deal. And even like you're working with those people, if that relationship is good and you guys work well together, you may have just found your partners for life or for the next venture you're doing, even in that process, because you're going to learn how you guys work together and more importantly, how you solve really tough problems together.
It's very true.
And so, myself, Michael, and Drew, we were in a deal for a year together that didn't close, our first deal ever. And we didn't want to kill each other at the end of it. And so we ended up working. Now we're on our 8th deal together. And so that's just something that I think the underlying situation that can happen that you don't really think about in the moment, but it can be such a powerful lesson and it can really set you up to win quite a bit. And so it's not the best outcome that you hope for, but I'm sure you faced a lot of problems that you may face again, and now you know how to navigate them even better.
I agree. I think that it was a very just lesson learned and being part of the building blocks, because these people that, joined that original deal have been partners with us in this, recent deals as well. And they have been exactly what you said, Garrett. And in addition to that, I feel like everything is a learning opportunity. Like we wouldn't be where we are today if it wasn't for that first, experience, because now we have that knowledge, and I don't trust, the documents that I'm given at first. Like, I like to be more, conservative, and I like to look at it in different ways. And same with, I feel like we learn through the journey of real estate investing. And so we get to apply those lessons learned to every deal that we look at today. And
how did you raise the $700,000? That's not an insignificant amount for your first deal.
That's a really great question, and I would love to talk about it, because you have to be flexible. So originally, when I read your book, Michael, I thought we're going to find that deal and we are going to do everything ourselves. And then you realize that this is a team sport and that you're not going to go far by yourself. And so you also have to be flexible and learn different skills. And when I was learning and I was told, like, hey, you're going to have to raise money, I never thought of me being capable of doing that, or Jonathan, like, that's not our skill. We have never been in that position before, besides doing fundraising for nonprofits. And so that was, a mind shift that we had to be like, okay, like, yes, I think I can do this. And what was really mind blowing was just all of the relationships that we had built before through our corporate jobs, through years of, doing smaller real estate investing, and just, really working really hard at our W-2s. People knew our character, and people were able to trust us, and were able to believe and see that we were going to create value for them. And so how that happened was, talking to people who knew our story, and providing them with the opportunity of investing in multifamily. And it happened very organically. It was not easy. We're also, we also believe in Jesus. And so we did a lot of praying in addition to just chatting with our network and sharing the opportunity. And last year we were able to raise $2.7 million, which was, I look back and I'm like, that's insane. And we keep getting calls from people like, hey, we're ready for the next one. And so it's really encouraging to know that we're creating value, and that it was maybe a limited belief back then.
Yeah, it's almost always a limiting belief. Nevertheless, very, very impressive what you guys have done here. And so you did 2 deals that basically followed in, almost automatic rapid succession due to the law of the first deal, which is awesome. And then you quit your job as well. So what's ahead for you guys? What's 2022, 2023 look like for you?
Yeah, well, now that, I'm doing the multifamily real estate full time, when there's multiple components, obviously, as I'm sure your listeners know, to deals. You can raise money, you can find deals, you can asset manage. For us, I really focus a lot on the acquisitions, and then the asset management, the project execution side of things. So, right now we're looking for a new deal. I'm actively looking every day. I make it my goal that anything within our criteria in the Dallas-Fort Worth market or the other tertiary markets that we look in, doesn't go by my plate. So, always talking to brokers, always looking at deals, and looking to get the next one going as soon as we can. And then pretty much the remainder of the time is, working on the deals we already have and delivering our promises to investors. And so, that changes every day. It's always, something interesting, but a lot of looking through, rent rolls with property managers, talking about renovations, talking about business plans. And, it might seem a little bit mundane, but, that's the back end of the work that you have to do if you want your project to be successful. And then, of course, like Paula said, we are actively talking to investors too, and raise money, even though that's not necessarily our primary focus.
Yeah. So how is your outlook shifted now? I think you said earlier on you didn't really think of it as a business, and I think most people don't. They think they're going to do this as a side gig to see if it works, and if it does, maybe it works, maybe it doesn't. You don't really approach this from a perspective of a business. And when I talk to people and I ask them what their scaling plan is, it normally is, well, I'm just going to do a deal like I did last time. And then you do that deal and you do another deal, and then you basically just solve problems along the way. And I'm wondering, now you've done 3 deals, what is your scaling plan?
Yeah, that's a good question. So I think that probably one of the biggest growths for me is realizing that, we can't do everything on our own, kind of like what Paula was saying. So, I do spend a lot of time networking with other potential partners and people that we can work with that we can learn from and we can provide value to their team. But additionally, I try to think about different pieces of the business that, either I can farm out or automate. A lot of our investor relation stuff, on our website and stuff, we've automated. And so that helps out a lot. And then also, using or working with virtual assistants, people online to do more of the just kind of in and out everyday activities is something else that helps. Beyond that, I think a lot of it is just increasing your capability to do larger deal size. Specifically, when you think of the asset management piece of the business, there's only so many properties that you can asset manage at once. And I don't know exactly what that number is, but let's say it's 5, right? So if I have 5 50-unit properties and I want to get more units, the easiest thing is replace one of those 50s with a larger property, right? And so working to where we're capable of closing on larger deals, I think we did really good with our most recent one in College Station on stepping up and challenging ourselves. But even continuing beyond that is something that I think is vital if we're going to continue to scale up.
Yeah, it's pretty cool. Paula, what plans do you have for quitting your job?
So currently I'm working with a couple of friends who started a development firm a few years back, and they do build to rent. So right now there's a lot of synergies and they're my close mentors. And so when you ask about the future of Apogee Capital, I really do see that there is going to be more synergies and opportunities for us to scale and use my current friend's company as a way to blaze the path for the future. So I don't foresee me quitting my W-2 yet because I do love what I do and I'm learning a lot. And but I think that there is going to be hopefully more synergies and opportunities for Apogee to create strategic partnerships with my current company.
Yeah, that's pretty awesome. So final parting advice, someone, is in your place where you were 18, 24 months ago, and hey, Shirley would like to quit my job, become financially free. What's y'all's advice?
I think for me, the thing I always tell people is, most people are pretty good about the education piece of things that we talked about. They're great at reading books or podcasts. Most people are very friendly and good at the networking piece. They're great about talking to people. I think it's the taking action, just getting a plan for what that looks like, regardless of what your level is, and just consistently taking action on a daily basis. And, not getting discouraged when things get tough, because this is not an easy business. No one ever said being financially free was something that everyone can do or wants to do. But it is possible if you're willing to, work hard, put in the effort and, push through all the discouragement and the challenges that come along your way. So my advice would be, don't give up, keep going on.
Yeah, we read a really great book called Dream Big during our past vacation by Bob Goff. And I am Colombian, if you haven't heard my accent. But, I think that one thing that I'm really learning and I'm really challenging myself and have challenged myself is to really shift my mindset, right? Like what your parents or what your family or what your friends are doing doesn't really have to be a limit and doesn't have to define your dreams. You can dream bigger than that, and your calling is greater than, whatever your heart and whatever you're dreaming, it's possible if you put the effort and take action, as Jonathan said. So I think it's dreaming big. Don't limit yourself and don't let other people limit you. So
love it. All right, people, how can people connect with you guys?
Yeah, absolutely. So there's 2 ways that are easy. One is you can go check out our website, which is www.apogeemfc, like multifamilycapital.com. We have an ebook. We have a subscription form where you can get in touch with us there, read a bit more about us and our story. Also, I'm very active on LinkedIn. And so if you want to look for Jonathan Nichols on there, real estate investor, you're welcome to send me a message on there. Happy to help anyone in any way that I can. Definitely love to give back, love to talk to people about any aspect of real estate investing that they're interested in.
That's awesome. Jonathan and Paul, it's been great to have you on the show.
Thanks so much, Michael. Thanks, Garrett.